Welcome back, traders. And in this lesson, we are going to explain uptrends, downtrends, and ranging markets. So the market typically is going to move in, one of three ways. You're going to be trending up, trending down, or moving sideways. And a trending market is one where price typically moves in one direction, where a ranging market is one where price typically bounces up and down. So first, we'll look at a ranging market. If this chart looks familiar, it's because we used it to explain support and resistance. But as you can see, this works well here because, as you can tell, price is just moving sideways. So in this little section of the chart, there's no definable trend. You can't really tell if it's going up or if it's going down. So when the market is ranging sideways, that's when we use support and resistance trading. Sell up here, buy down here. Sell up here, buy down here, etc. So that's the basis of a ranging market. Now, let's get into a trending market. So a trending market, we'll say it's an uptrend. So for an uptrend, price is making higher highs and higher lows. So for this uptrend that we have right here, you can see that we've gone up and we've come down and we've gone up and we're starting to come down, and we're expecting price to hit this trend line and bounce back up to continue the trend. So we've got our first high and our first low. Now we've made a higher low because we never reached back over to this point. So we've got our higher low. And now we're coming back up to make our higher high because this high has closed above this one. And then we'll come down, make another higher low since it's higher than this. And we can expect it to come up and make yet again another higher high. So for an uptrend, higher high, higher low, higher than the previous high, higher than the previous low, and this will create the uptrend. And to properly identify an uptrend, you need 2 touches on your trend line. And what I mean by that is that you need to start this here. So this is your first touch, and you've got your second touch here. So this is your trend line. And for a downtrend, as you can imagine, everything is just flipped. It's just opposite. Okay? And again, this trend, we have 1, 2, 3 touches on it before it reverses. So let's look at this. For the downtrend, like I said, it's all just reversed a little bit. You've got your first high and your first low. Okay, so you've got high and a low, and now we're looking for lower highs and lower lows. On this time frame, we'll call this your first low. So we've got high and low, and then we've got our next high right here. So we've got a lower high. Now we're expecting a lower low, which we get right here. Now we're expecting a lower high, which we get right here at the trend line. So we're expecting it to come back to the trend line, give us the lower high. After this, we're expecting it to give our lower low right here. And now we're expecting a lower high right here. But right here, price never gave us a rejection. It never rejected to sell. You can see it broke through basically immediately. So we knew that the trend was changing. And this became our first low. And since we broke through this previous high, we did not create the lower high. So this downtrend is now invalidated. And we're looking for the uptrend, which is what we're getting now. And we're getting this trend now. And that's the one I just explained with the higher high, higher low, higher high. We're expecting the higher low until it breaks and reverses. Okay. And that's an uptrend, that's a downtrend, and a ranging market for you. And we will go into further detail, obviously, later when we get into strategies, but that's just important to know. Very basics. That's an uptrend, that's a downtrend, and a ranging market.